Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, January 30th, 2023. It is 10:47 Eastern Time. I'm starting the video, so we're a little more than an hour into the trading day. And I just wanted to kind of recap the post I got out to you today with some of the market leading stocks and some trade ideas on both the indexes or, of course, those stocks. You can always trade individual stocks, and I'm just kind of reiterate my outlook and actually kind of maybe even firm it up a little bit. I looked at the charts over the weekend, got on the computer a couple times, including last night, and those charts I got out today. It's just almost an overwhelming amount of technical evidence to be short. So last week I told you, be cautious, and if anything, going light into the earnings for Apple, Amazon, and Alphabet. Those big three report Thursday after the market close. Now, we'll see what happens between now and then, but as I can tell you as of now, there's plenty of time as far as active trading goes and even swing trading, between Monday morning or really Friday's close and Thursday after the market closes. So you have up until the close Thursday, if you want to close out or reduce. All I can tell you is as of today, right now, there's a strong case to be short, pretty darn strong. And again, like anything, it pans out or not. But I'll tell you that the times that I do the worst in trading is when I ignore the technicals, a clearly bullish or a clearly bearish setup. And this is clearly bearish. We had a clearly bullish setup. It became more bullish, as it developed a couple months back, the basing pattern, the positive divergences, and everything else. This is just that clean board I have here. But remember, we had a divergent low back here on the Nasdaq 100, just like we had back here, and just like we had here. And those were the three biggest rallies in the bear market. Divergent low 1, 2, 3, and this one's still going. Could be more to come, but again, I always try to make clear on what time frames I'm speaking on, what time frames I'm trading. Quite often I'm bullish long term on something and bearish and short near term. Right now, like I said, just let's keep it simple. Let me just recap all those charts today. That's the BOD, or the benefit of the doubt, the primary trend line off the highs, the bear market highs right here in the Nasdaq 100. We hit it on Friday. We also hit the bottom of my most likely bounce target zone, and we also hit the 200-day moving averages right there. There's the red, it's a simple, the blue is the exponential. They come in close together, and so far a rejection. So we could certainly power on through there, and if this was the end or at least a major bottom with a lot more to come, then that's what happens. Sometimes you have a pretty good, in a bear trend. It's simple. The strategy is simple. It doesn't always work, but it's, trading's all about putting the odds in your favor, and that strategy is one of the strategies to trade is to short rallies into resistance. Again, just like in a bull market or a bull trend on a security, you buy pullbacks into support. They don't always work. You can also go into buy bullish breakouts of bullish chart patterns, or you can short breakdowns of bearish chart patterns to but that's what this is. And again, it's not one or even two or even three. I also have Fibonacci clusters. We also failed here at the that white line right here, this last leg down in the bear market. We had a failure right at the 50% Fibonacci retracement level. I didn't include that today. I didn't want to get it too complicated. So that now is 1, 2, 3, confluence of at least four different types of resistance. Price resistance, that's horizontal price resistance, about 290, 420. Downtrend line resistance. The box was really just a bounce target zone based on those levels of confluence of resistance and the moving averages and everything else. Well, that's it. So we'll see. This is a 60-minute chart of QQQ. Did I get that out to you today? If not, I might not have. No, I didn't. I just gave you the market leaders, and I gave you daily charts this morning. But that's that 60-minute chart. Here's the uptrend line off the recent lows. That was at what I call the Christmas trading range there. We got a breakout buy signal, and then I said in the secondary trading range there, that would be even a better buy signal. We got that back tested. If you missed the breakout, you had an opportunity to buy there. And then the whole thing from even the bottom of the range where I said it's removed shorts and covered shorts and kept those long hedges on. That's just, you know, that's a 13% rally. And again, we're also overbought in the near term as well. And there's the 60-minute chart. That's why I want to do the video. There's always additional charts or things I can say here. And there's the divergence, negative divergence right there on the 60-minute chart, just like we had here. You have a little wedge, divergent high, trend line, impulsive red candle. And so, and this is for right now, you know, the active trading thing, swing trading, that's something, will look something along these lines between now and Thursday, because when those guys report, that was a 3% drop. If you're an active trader, you take 3% in a day and a half, you know, less than 24 hours from the short entry. You take that all day long, because if you can get if you do that just once a week, and you're successful, for every week. Let's just say you go, 3 for 4. And, one of them you're stopped out on a minimal loss. You're still, you're still putting in better than 9% or whatever your number is in your pocket. And again, that's just an example. That's one of many trades, but you do that every month, and you're gonna do pretty well in your account. So there's the uptrend line. That's as clean as it gets. Look how many reactions there. And there's the break on Friday, and boom, today. Moving down, it's impulsive, and there's a little support there, a little support there, a little gap, and then the trend line, all coming together. So, for an active trader, this is what it's going to look like. Boom, boom. If they happen to undercut the trend line, there's a little bit of price support right there at about 285.60. And then that's the short-term trade. If you want to take just the short-term pullback, and that's again another 3%. But again, bigger picture, and that's what I wanted to talk about here. This could still be, and there's still a very decent chance that this is just a bear market rally, and there may be another leg to come. So there's two ways to trade this. Either the quick pullback trade, I give you some targets, I give you the IWM, I really like the small caps a lot right now, and those individual stocks. And again, I always say this, it's, when you're building a case, or the way I work, it's kind of like I use that analogy with the jury trial. You have the prosecution and the defense, and the prosecution needs to build a case. And the more evidence they can to build that case, the more likely they are to get a conviction, right? It's the same thing when you're trading, and that's why I went over those charts. That's why I take the time to go over a half dozen charts and show you Apple at the key 200-day moving averages. It has a great history. You can look at a weekly chart, turn off all the lines, and you can see those blue and red lines. They do a good job of acting as support during uptrends. And then when you're in a bear market, and you really got to go back far to see that, the real, you had a bear market back here in 2000 to 2002, rejected once it took out the 200s right there, rejected again. And then the last real bear market we had was 07 to 09, took it out there. Didn't spend much time under, but it's done a great job of supporting it. And Apple's also, keep in mind, been one of the strongest stocks. It spends very little time, but there's another period. Again, in bear trends, when it crosses below the 200s, it acts as resistance, and then when it regains them, it acts as support from when it tested from above. All right, that's that. So there we are, support, 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 support finally broken. They tried to regain it, failed it, and then boom, 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 boom. All right, so it either works out or not. And if they take it out by a wide margin, sometimes you do get whipsaws. Nothing is 100%, nor is Apple the be-all, end-all, and that's why I didn't just send a chart of Apple. You got Microsoft. There's well, that's a weekly. I gave you the daily there. What board did I give you? I gave you the simple clean boards showing you Microsoft is in close proximity. It failed shy, so there's one that didn't hit. If you wait for Microsoft to hit that, that means the Microsoft would have to go up, well, from Friday's close, another 2.5%, and then that would have taken the rest above their comparable resistance levels, whether it was the moving averages or trend lines. So you're not going to get all of them. When I go over the top 7 components of the Nasdaq 100, you're not going to have them all exactly at the same time hitting the exact same downtrend lines and the exact same moving averages. So again, it's the it's a combination of all of that evidence there. And so there's Microsoft, still a little shy. Alphabet, that downtrend line right here, perfect tag of that, still shy. So look, if we do pop these current resistance levels, meaning the 200 days that we're testing now in some of these stocks and QQQ and all that, then you have the, those that haven't yet tagged the 200 may want to. And I mentioned that before. Alphabet hasn't checked the 200 since back there, and it only made it up to the exponential moving average. It took them all out here. That was when it was topping. We had this little toppiness right there, and that's where we're at now. So that one's at trendline resistance, good enough. There's also some price resistance there, not much. Amazon, still the best of the lot. The technicals, that was my top pick back here. And, if I had to go long or short one, I wouldn't go anything right now because they're all at resistance. So, short the Qs as a way to short these guys, and that's good resistance right there. And and that was a nice rally. We caught most of that. Some of you might have caught all of it, 27%. How much more is it going to do? A multi-trillion-dollar, over $1 trillion company in market cap. Is it going to go up that much more? It's not really in Amazon's nature. I mean, that's probably all we're going to see for a while. So I think at best case scenario, was calling for outperformance for the FAANGs a few weeks back. We got that, and at best I think they're going to digest those gains for a while. Anything's possible. Look, we've got the big three coming up to report. There's a big old gap right there. Amazon may want to backfill, and if it does, there's the 200. So let me just say this: from Friday's highs, which was at 103.50ish resistance. By the way, very good resistance. That was that floor here. We did the same thing. I highlighted each and every time it came to 103 as a long-term support level I had, and as a buy pick, and also back then as my top pick. We got that rally. And then it broke it. And support, once broken, becomes resistance. So we broke it right there. We back tested it, rejected. Now we're there for the first time since that back test right there, and the odds favor at least a tradable pullback, in my opinion. Again, Friday, Friday, because it would be Thursday after the close when they report and the others report. That has the potential to change things. But my guess is at best case, it'll probably flounder around, consolidate. Again, best case, consolidate around that level. I don't think it's going to make a run all the way up there. Anything's possible, but I don't think so. It's not likely, in my opinion, or not probable. And there's that gap, and there's the 200 days. So if we do get, and here's another thing, I do these videos to try to get this stuff out in advance because the markets move fast. Let's just say Thursday the market likes what Amazon's selling, and Amazon pops up and gaps up in the after-hour session, and it gaps up here to about 110. There's the gap. Yeah, about 110, 111, maybe all the way up here to the MAs are at about 113.50 or so. That to me would be a hard short. The street would be foaming at the mouth bullish if Amazon were to do that. That'd be a big old gap, 8%. I've seen it do that before. But it would be a nice objective short entry because, again, the stock would be pretty near term. It's already getting pretty frothy. It's not extremely oversold. We're getting close to the 70 level. But in a bear market, that's it. You don't really stay there long. That was the last time we were oversold. Since the bear market started, the time before that, we fell a little shy of the 70 level. And then the time before that, it was almost just a kiss, maybe a hair shy of the 70 level. So in bear markets, oversold is usually fleeting. It's one and done typically. And again, so I'm right now favoring that there's a good chance. I'd put it at, still around 50-50 odds. I've been saying for the last week or so that's the end of the run. Maybe 50-50 we get another punch up. And if we do, again, you'll have Amazon and then some of the others that haven't yet checked those 200 days, like Alphabet and Microsoft. Has the 200s right here. Let's look at a couple others. I already covered Alphabet for you at trendline resistance. And by the way, and just like Amazon, if Alphabet pops up, there was Friday's highs. That's about 4.5, almost 5% to just massive resistance. You have the bottom of this trading range. Once you broke it, you've back tested it there, hard rejection. So again, this is what I can see. If the whether it's now until the FAANGs report or those last three big ones report on Thursday, whether we get a rally then. I suspect kind of maybe a little bit of a grind. I don't expect anything big on the downside, not really big, nor anything really big on the upside. But again, so bearish today, and I will be at this point in time, unless there's a big move down and I want to take some profits before Thursday. I'm going to have I have decided to take some swing shorts into those earnings, trend and swing shorts, because that may be, the start of the next leg down. And I want to say this: if not, if it pops up and everything's giddy and the street likes what those the big three companies are selling on Thursday night after the close, any gap into that level, and you can see even if it's a alphabet, if it spiked in, whether it's during the regular session or after hours, into that trend line, that's a nice downtrend line right there as well, and it's still in relative close proximity, so that would probably be a fake out. In other words, there's just a mountain of resistance overhead from about where we are right now to about maybe 5% or so above. So for swing and trend traders, it doesn't have to be, nor should I think it should be a hard short all-in kind of moment because of the earnings that are coming later this week, but worth establishing some short exposure and swing or trend short positions, because if it goes the other way, if the street does not like what they're selling and these guys all gap down, you may be denied an objective entry. And again, the bottom line is, I'm talking over and over about this, keep it simple. I'm far from a purely mechanical trader. I second guess and pass on some setups. Sometimes things rally into resistance, and instead of shorting it, even in a downtrend, I expect a breakout. Therefore, I don't short. Instead I wait for a breakout of that resistance to go long. So that's where, I might differ from a purely mechanical trader that, has a set of rules and doesn't a lot of moving parts, in other words, in my analysis. So that's it. So that's keep it simple this way: a scale-in zone, just like the QQQ scale-in zone. That's really no different. Most likely bounce target zone up there. And then again, anything above there, definitely don't want to start adding. You want to be concerned about scaling out if we start to get there. If Amazon starts to take out the 200 days, and all these other guys do that. Apple takes out the 200 days, Microsoft takes out the 200 days and that trend line. Again, that's going to come in roughly with that bounce target zone right there. It's all simple to me. That's the plan. All right. So anywhere from here, because we may not get all the way up there or there, have at that point, full allotment or close to it, and you can maybe a 3/4. It's all up to you, how strong your convictions are, and I always say you may not agree with my analysis. So if you're, hey Randy, I think this bear market's over. I'm looking to buy. I want to buy these things. Then wait for the breakout or buy pullbacks. When I give you short pullback targets on trades or short targets, there's I'm going to add a line here. I've got different boards, but there's Alphabet, there's support at 93.65. That's a nice support level. You want to buy there. If that doesn't work and you're bullish, maybe you get a pullback all the way to the uptrend line and buy that. And that's maybe what I'll be doing. I'm not looking out that far ahead right now. I'm not. If we get smacked down, by the way, on Thursday after earnings, that doesn't necessarily mean we're going to new lows. I'll assess the move if and as it comes. There'll be plenty of time. We're comfortably the market's comfortably enough above the recent lows that we're not in any risk of violating those right now. So we've got plenty of time to assess and kind of firm up my swing and trend trading plan and positions after the big 3 report on Thursday. So there's Tesla again. It's a little repetitive because I got these charts out to you today. 179.53, that's what it was color coded. It was support, it's pretty good resistance. Support once broken becomes resistance, and you can see a lot of these fangs have these pretty clean uptrend lines. Tesla, Nvidia, look at Nvidia's trend line. You have big resistance right here. That's why it was color coded at 209. I had that level color coded from back here because I was waiting for that to break for the next sell signal, which we got right there. And once it broke, that sell signal gave us an additional 47%, almost 48% downside in Nvidia. And guess what? That former support, once broken, becomes resistance. That level hasn't been tested since then. And now we came close enough. And what I always say is, if you see resistance at 209, don't wait to short a hit of 209. You might get it, and that's great. But if a lot of eyes see it, sellers are going to step in early, and that's what happened here. And now you're starting to crack. Haven't done it yet, but really close to cracking this uptrend line. Then what you might want to do is you zoom down to the 60-minute chart. Well, and that says go. There's a little wedge I had. Boom, there's a sell signal. You can take that. That's comparable to the daily trend line right there. But on the 60, we triggered a sell signal there. So pretty much everything that I got out today is objective because it either broke down on the 60-minute charts, broke some trend lines, or rallied into resistance, just like Meta rallying into the big 156, 55-ish resistance. That was support back here. Very, very key support. Broke there. Meta never looked back, fell, and now this is the first time back testing it. And not just the 156, 55-ish resistance, but also its 200-day moving averages, which it gave up back here and hasn't tested since. So this is the first test in the bear market for Meta since it really gave up the ghost, and some of those other companies. Again, I'm just to this video because this is about as good as it gets. I know lately I've had, my convictions weren't, let's check it. We got the nice long bounce. But I did make very clear it was no longer objective for new long entries, more objective for booking profits and starting to short. And now I'm kind of shifted to, as of Friday's close and today, a very objective time to both swing short, plenty of time in my opinion before Thursday evening, all Thursday for a quick short, or leave some of that on. Again, I wear different hats. I wear active trader hat, day trader hat, swing trader, and trend trader hat. And yeah, it's on just about all accounts pretty good. Time to start getting short. And the uptrend has been strong. It's been resilient. They've been buying pullbacks. Everybody wants in. Those that didn't want to buy the fangs back here, they want to buy them now, and that'll exhaust itself soon. Once that dry powder has been fully deployed. All right, so I think that's it. I covered most of them. Yeah, that's it. Just wanted to share my thoughts. Oh, and then on the small caps, I mean, how do you not like that? You have a big resistance. This level back here, support. It broke it here. Tried to regain it, rejected. Tried again, rejected. Had a little bit. I'll give it a couple weeks there. Took it out, but then it failed it. Tried again, rejected. Tried again, rejected. Last 3 days. Now look, if it takes it out, and pops it with conviction, and can build on that, the farther you get away from here, the sharper, the greater the odds that breakout's going to stick. But as of now, we haven't even broken out. And this is, again, it's technical analysis or trading 101. There's a little uptrend line, which is that wedge I gave you on the 60-minute chart. You, in a bear trend, short rallies into resistance, especially if you have additional evidence to do so, like I gave you the RTY, which are the futures, and I gave you the alternative, the mini futures contract or the micro. But there's, this is that price resistance on the 60-minute chart. Oh, not just that, also downtrend line resistance. I mean, again, that's why I'm doing the video. It sounds repetitive, but that's the case I'm building. There's a lot of evidence, almost an overwhelming amount now because of that, because there's so many resistance levels that we're at. If the market can power on through here, especially into next week, after the big, we'll be over peak earnings week at the end of this week. And so sure, if they can take it out and the small caps can break out, and even if there's a back test, the farther they get away from these levels, price resistance, trendline resistance, Fibonacci resistance, moving average resistance, then yeah, that's pretty darn bullish. And then you might want to strap in and hold on and get some longs. But I'll address that if and when it comes. As of now, look, again, it's all about probabilities. There's the last divergent high I had on, well, not the last, on this 60-minute time frame. That's as far back as I can scroll. That was a divergent high. It was followed by this. That was a divergent low, and it was followed by this. That was a divergent high. You can see my little wedge, followed by this. That was a divergent low, followed by this. That was a divergent high, followed by that. That was a divergent low, followed by that. Divergent high, that. Divergent low, that. Divergent high, that is what I think. Especially the fact that divergent high coincides with the downtrend line resistance there. on the 60-minute and price resistance on the daily. And then if you just want to look at the zoom in, you have this trend line here. It's an uptrend line. That one forms a little wedge pattern, bearish rising wedge, just like you had a wedge right there. And wedge-ish, but more of an uptrend line and divergence. Doesn't have to be a perfect wedge. Just look for the uptrend lines to trigger the sell signal. So in other words, this one was objective short here this morning, as well as Friday's close. I think I pointed that out on Friday, or during the day Friday. And then will be again once this trend line's taken out. That'll be another sell signal or add-on. First target comes in. Price and trend line resistance or support about 184. We get a reaction and maybe work our way down here to this trend line. That's just my near-term outlook, and that would be from that 189.20ish resistance level. If we hit this trend line and that T2 is price support about 177, that's going to be about almost a 6.5% drop in RTY. Again, if it breaks out, yeah, well, this market's full of whipsaws. I'm going to give you my true thoughts. I think if we break out and take out maybe on some of those the QQQ components, the Nasdaq components I just covered, the 200 days or trend line, those that are at resistance now, and IWM, there's a very good chance it's likely to be a false breakout only because of the big earnings coming up. So I would be skeptical. And yes, I'm biased. I'm more likely to ignore a near-term breakout and stay short. And I'm if that makes any sense, then stick with these shorts right now. In other words, give it a little bit of room. I really doubt. It is possible, but I really doubt we're going to run hard between now and Thursday. So I think the upside is limited. And again, I think best case scenario, we flounder around, the market does, and some of these stocks into Thursday, and maybe these short trades go nowhere. But I also think there's a better chance, that's why I got these out, that we'll see some profit taking. You know me, I already took profits, took them a little bit early, but not much, caught bulk of the move up in the big tech stocks and all that. But I mean, there's got to be a lot of institutional traders and individual investors that caught some or all of that move and are going to get a little bit nervous when we roll into Apple, Amazon, and Alphabet earnings. And so, I've been wrong before and I'll be wrong again. That's the only guarantee I ever give you. And the only thing that could cause a big move up between now and Thursday, if the supply and demand dynamics are really shifted, and there's a lot more willing buyers on the sideline, and there's still a lot of shorts. Maybe there's too many that shorted this, and they're going to get nervous, and the shorts may squeeze. And then also remember, FOMO is a powerful thing. It was very powerful in the bull market. You heard about that all the time, fear of missing out, and I'm sure there's some FOMO going on here. So again, I can sit here all day, tell you anything's possible, and maybe you do see a ramp up before Thursday and into those, everyone wanting to buy Apple and Amazon and Alphabet, thinking that they're going to blow the cover off the ball. But I put strong enough odds. I feel pretty good to carry a pretty aggressive short position right now, aggressive into Thursday before the market closes, unless I hit these targets I laid out. I give you some near-term targets on all those charts today, and then most likely, almost certainly, I'll probably carry on a little swing short positions, trend short positions that I'll ride through earnings, just in case these guys gap down, tank after earnings and kick off a new leg down. I don't want to miss out and have to jump back in after that. But there's a lot that's going to happen between now and Thursday, especially on the short-term chart. So I'll give you my thoughts then. Let's not think too far ahead. Let's just say right now, tons of stuff running into resistance in a bear market, in a downtrend, and that's again the takeaway is don't overcomplicate it when you're in a bear market or a primary downtrend and you rally into very good resistance levels, not just one but multiple. Doesn't get any better than that. I'd rather take that shot 1,000 times, be wrong, 100, but you do it 1,000 times, 900 times, it's gonna pan out for you. All right, I'm gonna wrap it up here. This has been Randy Finney with the Right Side of the Chart. Have a great day.